The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Afternoon from TFNN. Welcome to the September 15th. Terrific Tuesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to throw at us. That's the rule. That's the deal. Life is supposed to throw circumstances at us just as the markets do. So today we'll go take a look at what it is that the bulls and the bears, the buyers and the sellers are trying to communicate to you, and I'm absolutely grateful for your presence here. I'm here to serve you. So feel free to pick up that phone, dial on at 877-927-6648, internationally 727-445-1044. This is Turnaround Tuesday. Of course, it's none other than the Hotel California, sponsored by Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 181 points at 16,551. The S&P up 18 at 1970. NASDAQ Composite up 37 points at 48.43. The Russell 2000 up 5 points at 11.59. The DAX closed up 56 points. The FTSE closed up 53 points. Goldilocks trading back about $5 at 11.03. Silver down a nickel at 9.60. Light sweet crude up 58 pennies at 44.58. Lead the charge, the upside, Priceline up $24. Google up 13. Lending Tree up $10. Regeneron Pharmaceuticals up 6. GW Pharmaceuticals up 6. Amazon up about $6. Boston Beer, weren't they to the upside yesterday? I don't remember, but Boston Beer, it is down $8, 3.5% right now. Also to the downside, Intercept Pharmaceuticals off $3. Sonic Corp down a couple bucks, and let's go ahead and get things kicked off. Now, a lot of emails coming in, Steve at TFNN.com. You're welcome to send me an email as well. A lot of emails coming, a number of emails, I should say, asking me to take a look at a number of different things. So I absolutely will get to each of those. First, let's start off by taking a look at where it was that we left off yesterday. We left off yesterday was a 10-minute chart, because what you and I were doing was just simply utilizing our pattern tools to help us identify what the market was doing. Of course, you recall the market was forming a bottom. That was my call. My call was really the call of the charts. I had nothing to do with it. All I'm doing for you is reading the story of the markets. And the markets do the same things over and over and over again. So if we take a look at where we were yesterday, one of the things that you and I were looking at, several things. In fact, let me just go back. We'll just kind of reverse it to yesterday. So let's go ahead. We'll widen this up. And right here, this was at 12:20. It was about 12:30, 12:40. I think it was right in this candle right here, where we said, okay, let's take a look at what we had here. We had an A to B equals CD to the downside, a 1 to 1.272 A to B equals CD to the downside. We had a seventh wave pattern to the downside, utilizing the Chapman wave. We had price moving lower with less relative weakness. We had a nice little bullish reversal signal, bullish engulfing candle, a little bit of follow through on that session at 12:40. And we had a fourth element, which was our TAS market profiles, which were set up in bullish formation. What do I mean by that? I mean that point of control, that little light blue line, if you're watching this on TigerTV, closer to the bottom of the box, that says, okay, that's a buyer's box. Now, it says if price gets broken through there, there's a significant line of support that failed. In this case here, that's not what happened. And instead, the market went ahead and moved higher right after that. So you and I were there to do this live. You know, there's no hocus pocus dominocus. There's no secrets out here. And what did price do? Price actually went up into about, what, the 3 o'clock? No, 10 o'clock. No, 8 o'clock. 8:50, about 10 to 9 last night was when the ES Mini made its high which was a sixth wave. Now, no other patterns that were to the upside that you could identify. I could draw an A to B equals CD pattern that it went ahead and completed, but nothing else really as the market made its high at 850 last night. What it did do was it retraced. Now, you really can't take a look at volume for the most part because your after hours, not a lot of trading, thinly traded. So we don't really pay attention to volume or average volume around there. But what the market did do was it went from that sixth wave down to a sixth wave to the downside. And as it was doing that, same pattern that you and I took a look at yesterday. Now, that was coming into the time frame of 520 earlier this morning. Nice little piercing candle that took place at 530, 540, some additional follow through. Is there anything here that was really substantially different than what we took a look at yesterday? Not really. There wasn't really an A to B equals CD to speak of to the downside. Price was just slightly below the bottom of the box of the TAS market profile, but still price was pushing lower with less weakness. Now what do we have? We've got the market that had broken out in one sense or another, just moved higher is what we'll call it, to the upside. Now, as it's done this, remember, we just took a look at six waves to the upside, six waves to the downside, and guess where we're at right now? Six waves to the upside. And price had moved higher into this time frame right here, 1220. That's the high that we're taking a look at as we speak right now. I think that high has been tagged or was tested twice. Let's see, the high 1962 even Steven and 1962, so both at 1250. Now, price had moved higher, and it was at that candle at 1250 that was also a little key reversal session. So you got a key reversal, you got a bear sash, bear separate, really a bear sash candle out here. Here's the deal. If price moves above that level, I would say at this stage, not only will you get to a seventh wave, I'll say forget about the seventh wave. I will say that this thing recycled all the way down here at about 950 because that's a level with the little key reversal session. That means the prior bars, high and low, had been exceeded. You finish in the opposite direction. You are in extended condition. Now, remember, we're looking at a 10-minute chart out here. But the cool thing about you and I looking at a 10-minute chart is we can take what applies here to any other time frame, any other vehicle that you want to trade. Doesn't matter whether it's a commodity, a currency pair, an ETF, an individual stock, doesn't matter the time frame. The patterns work the same time and time again. Now, that's a 10-minute chart out here. And when 10-minute charts start breaking, you start taking a look at what's going on, 30-minute, 120, whatever the time frames are that you use. So let's go do that. But let's go zoom. Let's go from 10 minutes to 300 minutes. Let's go to our 5-hour energy drink out here. And what we're going to see as you and I switch over to take a look at our 5-hour energy drink, our 5-hour charts out here, we're going to see the prices up against resistance, in essence, inside the NQ, that's your upper right-hand panel, and the ES, which is your upper left-hand panel. Now, it's really the NQ that it's all about from here on art as well, but on here on out. Because if, in fact, we see the NQ close above its market profile, that is priced out at 43.45. Let's blow that chart up on the screen here for you. So that's the white horizontal line going across my screen. Price will move higher. Now, what it really has to do is not just get above that market profile, it also needs to get above that September 9th swing point high of 43.61. Now, if it gets above 43.61, I don't have the volume on the 300-minute chart. I'm not even that worried about it, but that could set up or maybe setting up an A to B equals C to the upside. In fact, you would have several A to B equals CD patterns that you could take a look at. If we look at the conservative one here, that's assuming that price is able to take that level out. Your A to B equals CD price projection, well, that would take it to, it'd be nice if I had this thing turned on. That's pretty odd. Where'd it go? Well, let me just do this. Let's get over to this tool out here. Let's put those prices on the left-hand side. So let me give me a moment to do that. Let me get down here, because I know you want a text on left. There we go. Okay. So the 1-to-1 A to B equals CD inside here. If price can get about 43.61, takes you to the 44.30 to 44.88 level. Likewise, if price can't bust it up, right? If it can't get above that level, what you should anticipate would be price would be pulling back to 42.81 to 42.49. I don't know which one it's going to do out here any more than you do. I know that you and I are able to call tops and bottoms. We're able to time the market. We're able to utilize a set of tools to allow us to do that out here. If we go take a look at one of those other tools, we'll go back to, let's just go. We're in the NQ. I believe it's about the NASDAQ. So we're going to go take a look. We'll go take a look at the Qs. We'll go take a look at Apple, see what it's doing. But let's stop in and take a look at the summation index out here. As we take a look at it, you can see you got the New York Stock Exchange, left-hand panel. Dead smack in front of you in the center is the NASDAQ Composite and the Dow on the right-hand side. As we speak at 1:16 in the afternoon, who's got the ball? In this football game out here, who's got the ball? That's what you want to know. Who has the ball are the bulls. You've got the price oscillator above zero in all cases. I can't tell you whether the next play is going to be like a Jameis Winston. I'm going to throw that first pass, and instead of making it a completion, well, he did make it a completion. It just happened to be a completion to the wrong team out there. Well, sometimes the quarterback totally blows it. Sometimes the football team blows it. In this case here, I can't tell you what that next play is going to be. It looks to me, though, since the NASDAQ Composite Price Oscillator has been above zero for quite some time, the Dow, which has been fairly weak out here, we haven't seen a ton of movement in price. Yeah, the market's up, 150, 60, 70, something like that. I'm not actually looking at my screen to tell me exactly what it's up. It just seems large, but it's all in perspective because we're dealing with 400-point days for the most part out here. So we haven't seen a huge move inside of the market, but it still is the buyers, the bulls, that are in control of the market. If the ICE oscillators continue to close today above the zero line out here, says that prices are going to move higher. That says that the next NQ should be able to take out that resistance level. And let's go take a look at what's going on a couple of individual stocks inside of the Qs, those that can lift the boats higher. Dow's up 196 as we speak. You know, you take a look at it candle-wise, because we're used to such wide candles that have had such wide price spread. 196 points just looks like a little blip out there. That makes doing the markets here, making market calls, a whole heck of a lot more fun to do. Now, yesterday, we were taking a look at Apple. We were taking a look at the swing point from August 31st. That had volume of 56 million shares. And yesterday, we thought for sure it would get above that with volume. Voila, it did so. It did it with a couple million extra shares, 58 million shares. Nonetheless, it closed above it. Now, remember, we took a look at our TAS market profiles to be able to help identify some levels of resistance as well. As we turn those on, we identified the daily top of the box to be 117.65. So that becomes the next hurdle for Apple, which is 13.6% of the NDX 100 out there. If we take a look at Apple, if it can clear 117.65, it's going to go try and rescue those passengers that are stuck on Gilligan's Island. That would be the skipper, Marianne. And, God, I wish I could remember. Oh, Thornton, is it Thornton? Thurston Howell the third. It's going to try and get all the way back up to that resistance level of that island top. It's got to clear that first TAS market profile high. But if it does that, expect this motorboat to go try to get up into that 127 level. Got to take it, though, one step at a time. Don't get ahead of yourself. Steve Rhodes with TFNN. We'll be right back. Hi, I'm Steve Rhodes, host of The Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Now, I had 3 or 4 requests. I've got 3 requests written down right here. 3 requests were if I could give my take on what's going on with bonds. So we're going to take a look at that first. The second was taking a look at an ETF that was dealing with the grains and commodities. So we're going to go take a look at that. And then the third was if I could review the meaning, if anything, behind the new moon solar eclipse, which took place on Sunday. I believe that came in on Sunday. So we'll take a look at all 3 of those things, and I'll continue to monitor my email and so forth. There might have been a 4th out there. So let's start off with the bonds out here. Now, I've taught each of you a really great tool for understanding divergent patterns with inside the bonds. I can't tell you why it works. I just know that it does. And you know I've been sharing this with you for years. We've got the 30-year Treasury T-bond futures contract, the December contract up on my screen right now. And what we know is that if you apply the stochastic to this, a 1433, that's not your normal setting out there, but those are the settings that you would go ahead and apply. What you're looking for is you're looking for price to move higher with the stochastic not confirming that, making lower tops. In essence, that's what we had out here. Let me go ahead and put that little red line right here. We saw, whoops, why didn't that do that? There we go. We saw this making lower tops. And as it was making lower, now you got to wait for the reversal signal in order for that to occur. And we also know that in the case of the Treasuries, had a nice little trend line that began back here July the 15th. So we had a nice little trend line that it was dealing with. And the same day that it broke that trend line, no, don't freeze on me now. The same day that it broke that trend line was also the same day that we saw a reversal of that divergent pattern, because we had a little doji out here the day before on August 24th. Then the leaves fell off of the tree. The leaves were falling off of the tree. That's the meaning when you have price moving lower after you've got a little doji candle. It broke that trend line and then off to the races. Now, the secondary aspect, you don't have to jump on a trade right then and there, but you watch for what happens at the 50-yard line inside that stochastic. That's the little red horizontal line going across my screen labeled 50. Well, it's not even labeled 50, but it's between 40 and 60, so you know that it's 50 out there. And when things get below that, that's a message that price is going to move lower. So the question is, what do I think bonds are going to do? This one gets fairly easy to call. The reason it gets fairly easy to call was because a few trading sessions ago, on September 9th, the candle that was formed out there was a hammer candle. So that means that low at 152.14, that low is really critical. I will say this to the person that asked me to cover bonds. If you see a close below that, if you're long, you're wrong. That says prices are going to go lower. Now, where will prices move down to? At this stage here, I'll just simply take a look at some straight retracements and say, well, that says that not just closing below that hammer candle, if you're long, you're wrong. You want to watch the 151.28 area, because a move below that sends you down into the 149-ish area. So you've got a hammer candle that says that the market is trying to hammer out a bottom. If, in fact, you see a close below that, expect lower prices, maybe even 100% move of a move. You got to take things one step at a time. But what was more important was your ability to be able to have called that top as price was moving higher. Again, same patterns that we take a look at. We look at the, now we didn't use the stochastic pattern. I've only been able to find it to be of consistent use in the treasuries. Why? I don't know. It just works, and you ought to use it if you trade TLT, TBT, or the actual bonds themselves out there, because it is a excellent tool out there. So that's my take on what's going on inside of treasuries. The second question was, would I take a look at a commodity ETN, exchange traded note? It is called the JJG. That's the ticker symbol. That's the iPath Bloomberg grains out here. Now, an ETN, different than an ETF. In fact, substantially different than an ETF. And I'm not going to say one is better than the other, because there are positives and negatives, just like everything, right? You can always find the gift in every set of circumstance out here. But understand that exchange-traded note is just that. It's a note. It is an unsecured debt obligation. I'm not sure that that's exactly how they explained it, but that's really what it is. It is an unsecured debt obligation. That says, give me your money, and I promise to give it back to you. Maybe, because I don't have to secure it against anything. An ETF is somewhat secured, right? Because what it has inside that ETF are the actual physical holdings. Now, in both cases, ETFs or ETNs, you got to know what in the heck it is that you're trading out here. It just so happens, it took me a little while to figure this out. In fact, I haven't even totally figured it out here. And I spent some time trying to do that. That's the JJG. I know that it's made up of 3 grains: corn, soybeans, and wheat. I know the percentages, but I've got no clue as to which month's contract or month's contract it is that even make that percentage up. In any event, we come back. Let's go take a look at it.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 238, S&P 25, composite up 53 points. Let's go back to the grains area, the commodities. So it was the JJG ETN, exchange traded notes, that I was asked to take a look at. So and for me to be able to give you my viewpoint on an ETF or any type of ETN, I've got to understand what's really behind it. And all that I've been able to find out with regard to this vehicle is that 41% of it is made up of corn. But it doesn't tell me which contract. It doesn't tell me if it is the current contract. It doesn't tell me if it's a contract that's further dated out. I know that 36% of it is in soybeans. I know that 22% of it is in wheat out here. All three of these vehicles do not need to be moving in the same direction out here. So you could have corn taken off to the upside, thinking that you're investing in corn, and soybeans and wheat take off to the downside. So you really need to understand what is inside it. But you've also got to understand, and this is what is crazy, you've got to understand which contract it is or contracts that are being traded here. And as I say, after 20 minutes, I said, enough. I'm not going to go look. Now, let's just go back and take a look at the ETF itself. And we'll take a look at it from a couple different standpoints. One, here's what we know about the ETN. I said ETF, but the ETN. We know it's broken a nice little downtrend out here. That's coming off of the high here from July 14th. So using nothing more than some nice little set of diagonal lines out here. We saw that price broke above that level September 9th. It has taken off ever since. If we take a look at retracement values from high down to the the low. We can see that this really should be able to get up to the 34.15 level. That's a dead cat bounce. That gets you back to that 0.382 retracement. It gets back into this high volume downdraft bar from August the 12th. That high, by the way, is 34.55. So the next move inside this ought to be between 34.15, 34.55. Or so. We know that prices traded above its TAS market profiles on a daily basis. 32.21 is the number. If we go take a look at some natural areas of resistance out here, let's go see if we can find what the weekly profiles are. Well, there's our bottom. There's our cent. Let me see what there we go. So the point of control where price is most comfortable isn't that much further ahead of us, which is at the 33.39 level. So you want to see price get above 33.39. That offers the promise of getting to 34.15, and the weekly profile high is 35.17. That's a new profile that began last week. What we also know, let me pull this chart over here. It makes it a little bit easier for me to do my wave counting. And if we take a look at it, price was moving lower. It was moving lower with less relative weakness out there. That pattern never set up because we never got a bullish reversal signal. But price did go down and make that, hey, that seventh inning stretch, that seventh inning wave candle, did that all the way down here on the trading day of September the 5th. So that makes it fairly easy for somebody who wanted to trade this to put your stop just one tick, 1 penny, in this case, below the low of that candle session on September the 5th. The 200-day exponential moving average is at 34.75. That's another area for it to run into resistance. But the reality is, in trading this vehicle, you've really got to understand what's going on inside of corn. Now, no idea whether it's the December contract or not, but we'll take a look at the December contract for corn. And as we take a look at it, you can see that same pattern here, that same pattern meaning that corn had broken through that descending trend line. Nice big volume that it had on that wide price spread, accelerated volume on September the 11th as it moved higher. Looks like price has run into its resistance. Yeah, it's run into its resistance. So corn has run into resistance of its weekly market profile. That says corn represents what percentage? JJG. Corn represents 41%. So 41% of what that ETF is now run into resistance if we take a look at the underlying asset. I have to assume it's December, but that doesn't mean it is December. So for those of you that are trading that, please do the extra work. And, I try to look at the prospectus, tried to understand what is it that they really are investing in here. Now, remember, they're not buying the actual contract. Right, so they're not even tied to the contract. There's pluses and minuses, but they're not actually buying that. But it's supposed to be traded based upon that underlying instrument here. I'm just giving you the assumption that it's December, and if so, 41% of it is up against resistance. You need to see the December corn contract get above this 393 level. Otherwise, it's going to pull back, and likely you would see that ETF pull back as well. If we take a look at what's going on in soybeans out here, soybeans up just a tad today. Now, soybeans, the interesting thing here, let me see. Do I have the soybean contract up on over here? Now, this is the continuous contract that I've got. We can see it just made a sixth wave to the downside, that little doji out here. So nothing of significance here as well that I can really point to you other than with inside its TAS market profiles. Looks like it's going to have resistance around 913 or so. Right out there is where it's going to run into some resistance. Soybeans inside that ETN JJG, that represents, come on, pop up on my screen. Why didn't it do that? What the heck? There we go. That represents 36%. And then finally, let's go take a look at wheat. First, let me take a look at the continuous contract here for wheat. Wheat is weaker than the certainly than corn is. I don't have any kind of price relative strength or weakness pattern. You got just a morning star reversal down there at the bottom. So nothing else. Let's go take a look and see what else may show up here as we take a look at wheat. Well, the positive is that the current contract here, the December contract, broke through a line of resistance, that little trend line resistance. So from that standpoint, it's positive. It is over its daily profile high, so that's a positive. This thing needs to stay above the 492.60 area, and as long as it can do that, well, then price ought to move higher. How much higher? I would take a look at the retracement levels first out there. That would say get you up into the 524-ish range. So that's taking a look at. Now, you've got other options, right? If you don't like the idea of investing your money in an unsecured debt obligation. Now, what's the problem with? I can't come up with all of them, but certainly you know one of them. It's the Bloomberg Grange. Well, it's not really Bloomberg. It's Barclays. It's Barclays that's behind it. So as long as you have a strong feeling about Barclays, I'm not saying that you shouldn't, but because it's a debt obligation, if Barclays were to ever get some kind of downgrade inside its banking structure, it's going to go ahead and affect the notes out here, right? So those are different things that most people wouldn't really think about, but that's really what it is you're investing in. If you are looking to invest in grains, you don't want to have to worry about having you can go take a look at some of those ETFs from an ETF versus N from, Tecrium, maybe? You could go take a look at he said grains, you could go take a look at the corn fund out here. Now, here's the problem with this, right? When you go ahead, I won't say a problem, here's the issue you're dealing with regard to this exchange-traded fund. You've got to understand what's inside it. And what is inside it happens to be for futures contracts. Most people would have thought, I would have thought, maybe I'm not most people. Okay, so I thought when I went to look at it and I wanted to find out what was behind this, I would have thought that the December contract would have been the most heavily weighted. Wrong was the answer. The December contract only makes up 14% of the weighting structure inside of the ticker symbol CORN, the ETF. March makes up 45%. May of 2016 makes up 12%. December 2016 makes up 28%. At least that's as of last night. So you've got different ways to play, these commodities. You can do it through the futures contract. You can do it through the ETF. If you're trading the ETF, by all means, please know what it is that you're trading and get access to those future contracts so that you can follow along and see what's going on. Because if you're not going to do that, then you're really doing yourself a disservice. Go find something else that you should invest in. If you're going to go trade this ETF, be willing to go take a look at the December 2015. Be willing to go take a look at the March 2016 contract and understand the weighting and try to understand exactly what's going on with inside it. So I hope that assists you with regard to playing these ETNs, these ETFs. This is the process I would go through, and I would never ask you to do something that I wouldn't do out there. So that takes care of that. The third question was the full moon. So the request that came in that said, hey, how come the market's not going lower today? I thought we had a new moon solar eclipse. This is no different than what you and I just covered here, which was taking a look at, understanding what's behind it, understanding what's underneath it. So the conclusion in the email that was sent to me was the market should have gone lower. Yesterday should have been some kind of high, or Friday really should have been some kind of high because the new moon came in. And I'm not sure where that conclusion came from. So let's go take a look at it. Out here, let me change this to my workspace, lunar charts. There we go. So we're going to go ahead and put up for you a chart of the new moon solar eclipse combos that come in. And all of the lines, so the bottom portion of my bottom panel of my screen out here are those days. If you see this little box out here, it means it came in over a weekend as opposed to coming right to a point. And those are the actual days of when that new moon solar eclipse combo. You get 2 per year out here. And with regard to how many have I taken a look at, I guess I've gone back for 22 years. Is that enough of a time frame for you to go back and try to get a feel for what this means? So let's just take a look at the most recent ones, because those that came up with a conclusion that the market should form a top, that is not what the actual data supports. If you take a look at back here, there was a combo right around March the 21st, 2015 out here. And as we take a look at the bottom of that red arrow on my screen, we can say actually If anything, it was more of a bottoming type signal than it was a top type signal. If you come back here on the trading day of, looks like it's October 23rd, 2014, there was a bottom that actually occurred October the 7th. This was just maybe more of an acceleration to the upside out here. Certainly no top that was in place. If you take a look at this one in April of 2014, April 28th, 29th, it looks like out here, you can't really say it was a top or a bottom. The bottom had made several days before, and market just kept moving higher. If you come out here and you take a look at the trading session on November 16th, 2012, or 15th or 16th, I can't tell exactly which day it is out here, but we can see that the market had formed a bottom. Again, if you just look at what the actual, so it's like taking a look at the ETF. You want to understand what the vehicles are inside it. If you're going to go ahead and use a lunar, but if you're going to go ahead and use a lunar aspect or any aspect, you've got to be willing to go back and take a look at each of the data points. In my opinion, you should go take a look at each of the data points, come up with a probability as to whether or not it made a market turn, a high or a low out there, which one, if there was any, predominant force in nature. You're looking at my screen out here. What conclusion would you draw? Sometimes does it make a top? Yeah, it sort of did right back here on January 3rd, 2010. But otherwise, this seems to have more bottoming type effects than it does topping type effects out here. And you go back, further in time, look at the, remember, we had a high that came in July of 2007. Market moved down lower. Moved down with a vengeance into August 17th. What do we have inside our markets here? We had our markets make a high, really the Dow, May 19th, and we had our markets move down lower with a vengeance into August. Kind of similar to back here in 2007. Now, the markets actually went on and made a higher high. There was a full moon solar eclipse back in September 14th, 15th, 13th, 11th, or sometime right around 11th, 12th of September out there. Markets went ahead and went on to make a higher high. Am I saying that our market's going to go make a higher high now? No, that's really not what I'm saying. But I am saying, just like in the ETFs, understand what it is you're investing in, or understand the underlying instrument, the instances, and things of that sort, and you will be just fine. So that takes care of those three elements. And if I missed anyone's email, my apology. Just send a reminder to me, and I'll make sure that I go ahead and take a look at that. So now that we've taking care of all of the mail out here, and the Dow's up 234, the S&P's up 25. Let's go take a look at the ETF structures. So let's go see what the Qs, the SPYs, the Diamonds, the IWM, let's go see what each of them are doing out here. As we start off by taking a look at the Qs, did we look at, yeah, we took a look at Apple. So as we take a look at the Qs, let's go ahead and put our market profiles up here as well. So we'll just decorate our screens. The Qs right now, they are trading up above the swing point of August the 28th. That had volume of 49 million shares. Light volume again today. You're only at 17 million shares, so you're moving higher on light volume. Let me tell you something. If you are bearish out here, that's what you want to see. You want to see the market move higher on light volume. The thing is, strap on your seatbelts, and what you want to see is the market move higher for the next 2 weeks. The next 2 weeks with light volume out here. Market's moving higher with light volume. Where is it likely to run into next? It's likely to make a move up into about the 108.04 level. That's your 0.618 retracement of the move from top to the bottom. That also happens to be what looks like our point of control for the weekly and the daily. Is that right? 108.46, 108.79. Looks like the Qs are headed right for that level. Right now, the Dow's up 233, S&P's up 25. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 224, S&P's up 23, Composites up 49. So if we take a look at the ES Mini out here, we can go take a look at the ES Mini as well as the Dow futures. Now, what you're going to see is this nice little wedgie. This is the kind of wedgies that you actually like to see that form inside the marketplace. And with this pattern here, once you get a break of that pattern, which we got today at about what time? It was about 10 o'clock or 10:30, something along those lines. This is a 2-hour chart that we're taking a look at. When you break that, your measured move is typically equal to the distance of the snow cone, so to speak. And so that says that what we would do is, and this is the ES Mini, we would take a look at the high of a price point of 1982, all the way down to, the bottom somewhere around 1912. So you're looking at a 70-point move. So we take that 70-point move and we'd add it to 1954, and that says that the ES Minis breakout move, could take you up to 2015. You're at 1965 right now. Remember, we've had some really large price moves inside of these markets. So, when you're looking at candles, in this case here, on the 120-minute chart, they've got some fairly large, wide price spread out here. So please be careful. Look, if you are short the market, use stops. If you are long the market, use stops. Always use stops. If you do that, and adjust your stops, be willing to adjust your stops or take profits or do whatever. But this stage of the game, there's no guarantees. But, we just take a look at patterns. You and I started off yesterday afternoon about 12, what time was it? Around 1:40 it was. We took a look at the market with it moving lower, and you and I together, called the bottom. Right? We called a bottom yesterday, just utilizing these patterns, forgetting about all of the hubbubaloo, forgetting about all the emotion, and we just looked at the chart and we just played the patterns out here. Well, guess what? Here's another pattern that you and I are taking a look at. We know what the typical outcome is when you break, these wedge patterns out here. In this case here, says that the market. So, does the market know something that you and I don't, at least with regard to how it's going to respond to tomorrow afternoon's decision, whatever that decision is? At this stage, I'd say, yeah. And look, unless the ES Mini gets back below 1954, it has a better chance. If it doesn't get below 1954, then 2014 is already etched in stone. Done deal. Okay, because there's never a done deal out here. But what's interesting is if we go take a look at a similar pattern inside of the Dow futures on that 120-minute time frame out here, broke through a similar pattern, you're looking at, in this case here, the move is from about 16,500 down to about 16, we'll call it, so about a 500-point move. So a 500-point move on top of 16,348, about 16,850 or so is where the Dow futures are likely headed to. So fasten your seatbelts. It's a wonderful time to be trading these markets. With regard to trying to invest in these markets, that's a whole nother story out here. That's a more difficult one. I would say the better longer-term investment is still that the markets are going to move higher. You should pray. You should do everything you can to get the cues to continue to move higher for a period of 5, 6, 7, 8 days on light volume. You want it to move higher on light volume, and you want to do it for an extended period of time. And then get ready to ride the roller coaster to the downside. Another big, swift move. Will it be as large as the one that we saw before? I can't tell you whether it will or it won't. But the market is very likely, and I do mean very likely, to head lower. Now, you and I won't know that for sure until we see whether or not these trend lines get broken here. And inside the Dow, what you and I know is that that trend line coming off of that March 2009 low is still held as support. But if that breaks, all holy heck will go ahead and break loose. Steve Rhodes with TFNN. Stay tuned. Our man David White is up next. Have a terrific Turnaround Tuesday, and I'll see you on Weird Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.